That is a $250,000 reduction over what this person could have got from that on that property a year ago. This is what rates are doing. And because she owns it for cash, she can afford to take the discount because she needs to get out of the deal. Real estate is about to get really, really good, okay? We are entering the sweet spot again. Now here's a different way to look at what I just showed you on the board. In 2021 was the market peak. Now you might say, well, Lee, prices went up. My home value actually went up from 2021 to present. Well, maybe, but rates have also gone up. So you have less buyers who can afford to purchase your property, which means values decline, and we now are getting into a buyer's market. Now, remember you guys, the market is a clock, okay? The top is 12 o'clock, that's the top of the market, and the bottom of the market is 6 o'clock. And I've shown you guys this for years, okay? The top of the market was 2021, early 2022, when rates were still at 3 or 4%. I believe that right now we are at a 1 o'clock or a 2 o'clock on the clock. We're not at a 6 o'clock yet. We will not be at a 6 o'clock until we see available inventory in most markets with at minimum a 6-month supply. So you want to track your inventory levels. Regardless of what market you are in, you need to be tracking inventory levels because a healthy market has a 90-day supply and a sluggish market has a 180-day supply, and a market that is in really bad shape has a 12-month or longer supply. Now, I don't believe we're going to see a 12-month or longer supply because the feds are tracking this too. And they're going to be looking at number of months of available inventory in any given market, and they're going to be looking at the employment rates. When employment rates start to go or unemployment rates start to rise and inventory levels in markets elongate to 6 and 8 and 9 and 12 months, that's when the feds are going to start dropping rates again. A reducing rate will spur the people who've been sitting on the sidelines waiting. It'll spur them to now come in and buy, and that's when we will hit 6 o'clock and start going back up the other side of that clock. Inventory levels are the indicator that you guys need to be tracking in your market to see when change is really going to begin. Now, the best thing you guys can be doing is purchasing as many properties as you possibly can over the next 18 to 24 months, buying as many of them subject to, meaning taking over the existing seller's mortgage, okay? So if we can go in and buy these properties with a 3 or a 3.5% interest rate, simply by taking over the existing mortgage and just making the payments while we rent that property out, that's beautiful. Okay. Secondly is finding motivated sellers who own the property free and clear or have a substantial amount of equity where they can reduce the price to a level where we can come in and buy it with cash. Even though cash might cost us 9 or 10% interest, we're still getting a reduction low enough to absorb that increased capital cost. Here's an example. We are closing on a deal this week, and it's only about 8 blocks from our office here in downtown Coeur d'Alene. It's in an area called the Garden District, highly valued area. And just a year ago, there was literally a 5-day supply of inventory. And if you had a deal go or a listing go live in the Garden District just a year ago, you would have sold this house for anywhere from $550,000 to $650,000. Old house built in 1903. Seller put it out on the market, seller finance or for sale by owner, asking $550,000. Got nothing. We came in, put it under contract, got the inspection done. We are closing this week on that property for $322,000. That is a $250,000 reduction over what this person could have got from on that property a year ago. This is what rates are doing. And because she owns it for cash, she can afford to take the discount because she needs to get out of the deal. She's moving out of town, she needs the cash, owns it free and clear. So this, you guys, is where we're going to come in with these 8, 9, and 10% private money mortgage rates. And remember, you guys, we can get 12 and 24-month terms. That'll give us enough time to weather the storm. And now property values start coming back around. And then we're going to start selling these off at 9 o'clock, 10 o'clock, 11 o'clock, 12 o'clock as that clock goes up the other side.